Finally, the moment we've all been waiting for, the October CPI data. We'll see how that comes in. We're going to cover that. We're going to talk a little Bitcoin because it's having a major impact on the markets. Marc Chaikin at 8:15, and we're going to sneak in a special guest at 8:45 today. We got some earnings to cover. Let's get right to it, Mitch. We got a lot to do.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Conan.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, good morning, traders, investors around the world. Let's get started. S&Ps catch a bid off yesterday's low, up 10.50 at 37.66. We're still green on the week. The dollar's up 33 cents at 110.80. TLT flat. Crude in the red again, down 41 cents at 85.42. That had an impact certainly on oil stocks yesterday. Gold in the red by $1.40, 17.12.30. Silver in the red by a dime at 21.22. Bitcoin flat at up $5 at 15.625, and Ethereum is up $14 at 11.48. Triple D buried in the trade cave here this morning, trying to claw his way out. Let's bring Triple D on, and Money Mitch, you're going to keep us in line today, keep us moving right along with two guests and a CPI number.
That we are indeed. We're definitely going to be watching the CPI report, but let's start off with what shook the markets yesterday. Of course, Binance backing out of the FTX rescue. This was definitely what shook up the market. A lot of people getting caught in the crypto markets, but also in stocks themselves, right? Even crypto stocks getting hit hard here.
Ooh.
Of course, the issues are beyond our control or ability to help, said Binance in a tweet. FTX was valued at $32 billion earlier this year, and now, of course, is in jeopardy of collapsing.
I don't, this isn't my industry. I just know the risk that obviously a lot of companies take here is excessive. We're seeing that here now. I mean, the one thing about FTX is they build out a lot of other companies which probably had tough balance sheets, so it probably didn't help their own balance sheet when they're looking through all that. And then obviously Binance takes a look and they're like, whoa, we're not touching this thing. So, I mean, I don't know. I guess it is what it is at this point in time. I feel bad for the investors.
Mm-hmm.
There's a lot of wealth that is going to be lost here. It is showing repercussions in the market. I don't think it's a coincidence that the S&P has a really bad day because you're seeing some deleveraging, maybe, where people thought they had wealth here and they don't. So now, they come in and they start selling other stuff to raise up capital. So it is all interconnected to a certain extent. When you see 16, how much was lost total? Do we know how much on this FTX? We know Buddy there lost 16 billion, but what was lost? Do we know what the losses are going to be total? Because it wasn't just, obviously his losses across the board. I mean, Ontario Teachers Fund is involved in this thing too.
Exactly.
There's so many, there's a lot of money being lost here, and it's not just.
Novagard said he had 77 million with him, and he doesn't expect to get that back. So I really don't know what the full extent of this is going to be. But I mean, there's no doubt it's having an impact on the market, and the money. See, the thing is when money comes out of one sector, it goes into another sector, right?
Yeah.
And then we see the rotation, but this money is gone.
Yeah.
Right? Are people
Poof.
Yeah. So it's really hard to gauge, where, is gold going to benefit? Stock so far it's been bad for the stock market. It's taken, a risk off the table. People are cashing out. I don't know if they have Bitcoin holdings or what. I did notice the CME futures took a big jump in open interest yesterday. So on a big down day, of course, there's longs and shorts, loading up. And there's this other guy, Justin Sun, who's supposed to be looking. So I mean, if he comes out with a plan. He's from Tron, then this could turn around and rally, $1,000 or so. But there's a lot of overhead supply.
If one thing we've learned is you can't invest in any of these stable coins. Nothing is stable. If it says stable coin, it's not stable. So there'll be a million people that argue, oh, no, mine's okay. I mean, it seems like it's just there's just too much unknown risk.
There's a conflict of interest too, right? When the platform itself creates a token for itself, right? And so this was FTT, FTX. This is where I think that in the long run, they're not going to be able to do this. I think it's a conflict of interest to create that token because it incentivizes you to use that as collateral. And it seems like that's what was done here in FTX. So just do a little deeper dive, guys. There's definitely some deeper understanding here if you are going to be interested in the crypto environment and maybe you're looking for investments in the long run. Well, you're going to have to do some deep dive to understand the situation and what exactly happened. Now, one thing I would clearly say, and I've said this before, team, understand that keeping your cryptocurrency on these platforms does not make sense risk-wise. It does not. It makes zero sense. You could have pulled it from this platform and you would have not lost anything. Versus everybody that was having it on this platform, maybe staking it, maybe getting a little bit in return for having it on the platform. What ended up happening to them? Well, they didn't understand that the risk was that they would lose all their money. And that's exactly what happened here. And so pull it off. Either it's cold wallets or completely off. That's what I think is the best move here to understand in cryptocurrency that could have saved a lot of money. But a lot of people instead kept it in the platform. And they
didn't have the money, Mitch. That's the thing, though. People went to get the money, and there was no money there. And the thing, and then we should move on to earnings.
It's too late.
To me,
at that point,
the whole
way that the pace of way this happened is so disturbing. I mean, Scarucci makes his big investment in August. That's it. This just came unraveled in just. It seems like overnight, and that's the thing.
Because they had the keys to the new Miami office, and the next day they're going bankrupt. What the hell, man? The speed of this stuff, I didn't touch any of this stuff. I had a little bit of Bitcoin investment there. I have a little piece of a legacy position, which is 0.0001% of my portfolio that I left there just for fun. It's literally like probably that much. It's so small, and it's got smaller over the course of time. But this stuff, you just can't trust any of it. So, I mean, you can say, well, Bitcoin's safe. I mean, yeah, I'll tell somebody hacks into your account somehow and steals them from you. Or if somebody comes to your door, puts a gun, you got to give them your code. I mean, I just, the whole thing is just not safe as safe. If everybody wants to think it's safer than banks, it's not true. Don't drink the Kool-Aid anymore. Stop drinking the Kool-Aid. So I don't know. If I was going to invest in one thing, it would just be Bitcoin. If I was just going to invest in one thing, we were playing this stuff, last year I said Bitcoin and Ethereum. I'm not even sure about Ethereum anymore. I don't own any Ethereum anymore. But for me, this is not my kind of stuff. Everybody, there's so many people that, when I say something negative about Bitcoin or say something negative with the crypto industry, I get 1,000 hate messages from various sources, including, even, some people even come to the chat after I say something on Twitter to give me more hate messages. I mean, the risk here was incredible the whole time on all this stuff. And we've warned people about all this stuff. I mean, once you saw one go down, like, what's the history here, Mitch? What was the first one? And then you had,
I mean, it all started,
so that went down.
You had Celsius, you had the Luna coin. Those should have been very early warning signs.
What the hell is this stuff?
To protect yourself.
I mean, they're creating wealth from nothing. That's the whole problem too, is these people create these coins and they're like, oh, this is value. Like I said before, I said this 2 years ago. Here's the Denny coin. We got the Denny coin. I'll write you a note. You're going to pay $10,000 for a Denny coin. And then I got $10,000. I just wrote a piece of paper of nothingness. You just got value of nothingness. The only reason it has value is that other people deem it has value. It was the same thing with the NFTs. And that all went down in a blaze of glory too. In the long run, fundamentals matter. These things, most of them don't have any fundamentals at all. It's not cash flow. Some of them maybe, it's different stories. There's 10 million of them. I don't know each one individual story. But a lot of this stuff is just smoke and mirrors. A lot of this stuff was created from wealth from nothingness. And when you create wealth from nothingness, eventually it goes back to nothingness.
All right, now let's get into the stock action today. Let's go towards a good report, at least it moved off of the report. Let's go to Rivian here. Interesting stock to talk about. Let's take a look at their Q3 earnings here. Adjusted EPS at a loss of $1.57, beating the $1.82 loss estimate. Sales at 536 million, missing the 551.57 million estimate. They did kind of hit their production numbers. Q3 production 7,363. They reaffirmed 22 production guidance of 25,000 units.
I'll just give one technical comment. Got to get to yesterday's high of 31.15, right? That's the first things first. And looks like you're stalling a little bit here at 30.5. So 31.15, that's my number on the upside, not trying to buy it on a dip.
I'd sell it. And I mean, these things are in clear downtrends. The valuation is nosebleed. It seems like every time these things has had a rally, it's been another selling opportunity. It's up 8%. It feels like it's just another selling opportunity. Next.
Let's get it. Let's go. Let's move down the line. Let's go to the fake meat or beyond meat, whichever way you like to call it. Q3 EPS coming in here at a loss of $1.60, missing the loss of $1.14 estimate. Sales at 82.5 million, missing the 98.11 million estimate. So big miss there on the sales, miss on the EPS. They did see full year 22 revenue lowered their revenue, their outlook to 400 million to a high end of 425 million versus the 453 million estimate. Looks like competition is getting to them. That's what Beyond Meat's executive said.
Same story as Rivian. All rallies to be sold in this thing. I mean, you can look and say, oh, it's $200. It's $11. Stocks go from $200 to $11. Usually go to single digits and eventually down to $1. Hate Beyond Meat. No point to owning this fake meat story anymore. The story is dead. I'd sell all
fake
rallies.
Meat in an inflationary
Just
environment.
my opinion. I would buy none of this stuff.
It's
If it doesn't have cash flow, it doesn't make money. I'm just saying, if it doesn't have cash flow, it doesn't make money, I don't want to invest in it.
Next.
All right. Well, here's one that's in between that is still kind of making money, but not much. Let's do the Dutch Bros really quickly here, as Dutch Bros EPS at 9 cents, beating the 8-cent estimate. Sales at 198.6 million, beating the 194.75 million estimate. Dutch Bros did see full year 22 revenue towards 725 million versus 724 million estimate. Making a little bit.
I don't follow the fundamentals of Bros. I know what it is. I don't know the story. Do your valuation metrics.
I got you.
Tell me when it's got a PE of 14.
Yeah, it's just it looks like they're being able to finally start working their margins a little bit better than last quarter. Last quarter, they talked a lot about how inflation was hitting them. You can see their EPS at least at 9 cents here. They said EBITDA at least at 90 million. They're just being able to be profitable in this environment. I think this is the kind of company that you wait till the environment changes, and then I'd be all rah bullish. But right now, I'm still kind of holding off to the side.
It's a tough
Now, someone
story.
smart out there, yesterday's high, 31.87. That pop got to 31.65. You're $2 off that right now. So you got some heavy lifting to do even to get back to pre-market high, yesterday's high. So until this gets above 32, holds 32, have no interest. If it takes out the low today,
Mitch is drinking it right now.
27.94.
We know we got one sale. I don't follow the
Costco coffee
enough. If it's making money, that's good news. Tell me when the PE is under 20.
All right, let's go to the next one here.
Memo when the PE
one
is
more
under
quick
20,
one, then we got to get.
Yeah, we'll get Marc Chaikin right after this. Let's do one here. Speed up. Let's all take an energy drink. Let's go with Celsius Holdings. Q3 EPS at a loss of $2.46. not comparable to the 10-cent estimate. Sales at 188.2 million, beating the 161.91 million estimate. Celsius did say that their third quarter results were negatively impacted by 155.4 million expense in sales and marketing related to termination expense of prior distributors recognized. So that's why the EPS is at a loss of $2.46.
And they rallied on that. I'd
Yep.
sell it. Not for me either. Sorry, I'm in a bad mood today, obviously, but this is all stocks that aren't making a ton of money or losing money.
I know.
And they're rallying on it. I'm like, this just looks like selling opportunities all over the place to me.
Yeah, I haven't taken a look at what the PE is.
Potential support would be the top of yesterday's range. If you're looking for a gap fill at 82.69, that's $2 away.
I'll tell you one thing. Yeah, I think Joel's internet is cutting out a little bit.
All these charts look the same, but let's bring on Marc.
All right, just for Celsius Holdings to keep in mind, forward PE at 72. So be careful with a stock like that.
Yikes.
All right, let's go ahead. Let's go ahead and bring on our first guest today. We got two guests for you, team. So hit the thumbs up. You guys excited? Let's get right to our Chaikin. All right. How we doing, Marc?
New graphics. I love them. Dennis, you would be in a better mood if you weren't long Solana.
I don't even know what the hell Solana is. I've heard of it. Everybody pitched me on Solana like 2 years ago. They're like,
know, me too.
Solana.
You didn't
I don't even know where it
man?
is. I'm assuming it's down with the rest of them.
Yeah,
I think Solana is where a new Italian immigrant goes to get his haircut.
Is that where it happens? Because I
That's
have
it.
no idea. I have no
I
idea
don't know.
what a Solana is. I don't know what kind of coin it is. I know I had about 100 people trying to pitch me on it though 2 years ago, and I was like, no, I don't understand it. It's not for me. Is it down? Is it down from the highs? I'm assuming it's way down.
Oh, it's part of this whole crypto meltdown.
Yeah,
they were selling it.
Then
We may have to
Man,
get Joel
I we love you to take lead here, but it looks like your Comcast. We're gonna have to short Comcast today. Dang,
Yep.
You there, Joel? Are you live?
He'll get back.
I'm here.
Joel, come back.
He's back.
Me
All right,
and Money
we'll take
Mitchell
lead
handle the
here.
interview
All right,
here.
well,
Joel's
let's
gonna figure out
start by
the
looking
internet
at the stocks you were talking about. Beyond Meat has had a bearish rating in our Power Gauge trade for 18 months. Carvana, disaster du jour a few days ago, has had a bearish rating for 2 years. It's a bear market, and the chickens are coming home to roost. I have no idea what that means, but that's a good expression.
Marc, you said there a couple stocks bearish. What is pointing towards the upside on the Power Gauge?
Energy.
Energy still? We're still in the energy boat?
I think so. You got a major crisis in Europe. It fluctuates day to day with the dollar, weak dollar, better for oil in theory. It's the only place where I see a fundamental story that makes sense to me, and the technicals support it. So, yeah.
Any idea on industrials? I've been seeing especially farming and heavy construction stocks like DE, CAT, Picard making moves up. What do you think about these stocks, Marc?
We put out a buy recommendation about a month ago on Cummins engine, which is, obviously it's a diesel story, and diesel fuel is very high. So they've got a bit of hydrogen fuel play in them. Deere, we have neutral rating. It has been outperforming, but I don't see an edge there. Caterpillar has a bullish rating as of about a month ago and is making new highs. It's an interesting bear market when you have stocks like Caterpillar right up near their 52-week highs, and some of the energy stocks as of last week. But I think you start out in this market by knowing what to avoid. And for me, it's clearly avoiding tech. I spoke at the Stansberry Annual Conference 2 weeks ago in Boston, which is why I couldn't be on the show. And I was the featured speaker at 8 in the morning on Tuesday and said, you've got to get Amazon out of your portfolio. It's no longer a core holding. It has been for 10 years. The stock was 120 at the time. That's just 2 weeks ago. and look where it is today.
Great
So,
call.
and I'm not looking for a pat on the back about the call, but it's indicative of where I think all these stocks are going. Tesla, because of industry sort of fundamentals broadening out, and also Elon Musk is totally distracted. Obviously, it's an oxymoron to say he's distracted.
The
And
bottom line, Mark, and we've been saying on this show for a while, I know you've been saying too, the valuation matters. In 2022, valuation matters. And the reason the energy stocks caught such a bid, they got low PEs.
yeah,
The stocks are cheap. The valuations matter. They're selling stocks with 100 PE or stocks that aren't making money, and they're buying stocks that have low PEs.
yep,
That's
indeed.
pretty much what it's moved to. The Fed has created this because when, and I gave this argument to a Reuters reporter like yesterday. And I mean, earnings today, when you're in an inflationary environment, or you're in a rising interest rate environment, or an environment with high interest rates, which we are moving into, earnings today are worth much more than earnings tomorrow. So that's why cash now, because you can earn money on that cash, is worth a lot more. And you clearly see that if you were just reading the Fed's tea leaves a year ago, you'd be positioned a lot differently than you are. And you're right that the time to own these nosebleed Amazons, Teslas was 2 years ago, when story mattered and everybody didn't care, and it was free money for everyone. The free money days are over here. So now you want to be investing in companies that are actually making money.
Yep. And then go back and for people who like to bottom fish, which, my expression, bottom fishing is the most expensive sport in America.
I think so.
Look at how long it took Google to come back after the 2008 crash. Look at how long it took Amazon to come back to previous levels after 2000. It's a long cycle, guys. It's not just 3 months and they're at new highs again. So you've got to look elsewhere for core portfolio holdings. And for me, it's energy. I don't see us, especially in a geopolitical world that's pretty uncertain, whether it's Russia and Ukraine or China and Taiwan. That creates inflation and it creates shortages. And I think you need to be in energy.
Are we in for a prolonged couple of years where maybe technology isn't in favor?
Yes. PE compression can go on for a long time, and that's what you're seeing. When real rates are rising the way they are now, you get PE compression. Now, some people would say, well, we're down from 25 times to, 15 or 16 times on the S&P, but we haven't seen earnings shrinkage yet, guys. And that's the big, that's the shoe that hasn't dropped yet.
Yeah, it's all been multiple compression, but if the earnings actually started going down, Katie bar the door. I mean, if we actually go into a recession, which we haven't even seen the recession yet, but if we actually do go into a recession, I mean, I think we're going that way because the savings rates, we've seen the charts, they're on Twitter, they've dropped substantially from the consumer savings rates. First thing you do is you eat up your savings, and then you start eating into debt, and then you stop buying stuff. So eventually, if the Fed keeps raising rates long enough, recession is coming.
Yep, and you look at consumer credit card debt, and that makes you a little leery about buying the banks, which is the other area where we're seeing, a bullish power gauge, both from a sector, industry group, and individual stock level. But that, right now they're killing it based on net interest margin because they're borrowing at very favorable rates and lending long, but that makes me nervous when I see credit card debt going up. And then people who've analyzed it say people are putting their utility bills on credit cards. They're putting their car payments on credit cards. They're putting their rent costs on credit cards.
It's scary.
It's scary, but I don't want to be Mr. Gloom and Doom. That's the worst case scenario. That's the Mike Wilson of Morgan Stanley. And depending on which strategist you read at Goldman, it's the Goldman 2,800 to 3,000 case if you fold those two guys up. But again, for the viewers, there's one thing to understand. It depends which Mike Wilson you're reading. The Mike Wilson who says we're bullish here from a tactical point of view in the short term, but I'm still looking for 2850. So Wall Street analysts can be really confusing, which is why I try and have a point of view and stick with it until proven otherwise.
So, Mark, what do you think about inflation today? You think we're going to get a little bit of a hot reading? You still have an outlook for 28, what was that, 2850? So how do we get there?
My go-to read for inflation is the Cleveland Fed's, I think it's called Nowcast. And they, as of yesterday, were projecting about 0.1% higher than the street consensus.
Okay.
So it's a small divergence, but over the past 6 months, they've been right 5 out of 6 times in terms of what's going to happen. So, but it's hard to know if bad is good or good is bad. I mean, you could get a hot inflation number and someone could spin it.
Yeah, the spins in this environment are crazy. And that's why I feel like the algos are losing sometimes. They're just jumping onto the first thing that they're reading, but that's not really the outlook and the overall perspective. But thank you for coming on today, Mark. I'm going to get you down as we're going to get ready for the CPI report here. It's definitely going to shake things up, but I always appreciate you coming on and giving us some insight.
One more line here. I thought we'd make the low in October. We did make a low in October. I think the final low, if there is a final low in 2023, is going to come in February. At lower levels, somewhere around 3,000 to 3,200 on the S&P as earnings actually start to come down.
Thank you, Mark. Like always, we appreciate your outlook, and definitely you guys can keep up with Marc Chaikin on Twitter. Check him out. I put his Twitter down below on the description. You guys give him a follow. Have a good one, Mark.
You too. Mark. Be well.
3 minutes. Right. Hopefully we get Joel back. You're going to be doing it by yourself because Money Mitch, I'm going to have to leave here in about 1 minute here to prep for the numbers. So
I'm ready to
run the show by himself, though. He'll give us the numbers.
Come on,
he'll talk.
I got you.
We'll be back. We got Gordo coming on here in a few minutes as well. So Joel's just trying to fix his internet issues here. Bad day to have internet problems. I'll tell you that much. If I had internet problems right here, I would be like, I'd be really nervous. I'd be really nervous if I was having internet problems right now, man. All right,
I'm going to the 1 minute here. Dennis, you can listen in, add whatever you need. And if you need to go in the background, go ahead. All right, so we're talking CPI here, all right? I'm going to first focus on month-over-month readings. Then we'll talk about the year-over-year reading. CPI, plain and simple. The headline number, right? So that's going to be estimate 0.6, prior 0.4. Now, when we start talking about the core CPI month-over-month, this is definitely, I think, the one to watch here. Estimate at 0.5, prior 0.6. Let's start talking about the year-over-year readings. Year-over-year's readings for core CPI is going to be an estimate.
I'm back. Let's hopefully you had a bigger connection here. Go ahead. Give the preview, Mitch. We got about a couple minutes here to preview that number.
Got you. I'm on year-over-year core CPI. Estimate is 6.5%, prior 6.6. What do we want to see if you're a bull? Well, here you would want to see like a 6.4 or 6.3. That would definitely give it a nice lift. Of course, the prior reading was 6.6. That's probably the reading that we don't want to see if you're a bull. If you're a bear, that's the reading you'd be looking for. Now on CPI year over year, the estimate is 8%. This is the kind of the number that everybody talks about. Prior was 8.2. And before that, remember, was 8.3. We only went down 0.1 last time. This time, they're still giving us an outlook that is going down 0.2% on the year over year, just regular CPI reading. Let's see if we get into the 7 handle, or do we stay in the 8s? That's the thing I would be watching for. Now, what are some areas to look for in the report? Because that's an important thing too. I will give you guys the labor of statistics link so that you guys can get into the report. What are areas that we want to be looking at? Services. So we're going to be looking at what includes services. So you're thinking Medicare, rent, airfare, recreation, educational, car insurance. That's what we'll be looking at also. Another thing on this report, used cars prices should be falling fast. We'll be looking to see if we see at least a little pullback in that area. Shelter costs, of course, are the area that we don't expect to see such movement on the downside because it's sticky. And remember, shelter costs 40% of CPI.
All right, go to the 1 minute here. I'm still bringing up my platform. All right.
That's it. You guys see, they first like it, but like always, we don't overreact to this first news. Let's wait for a second to see what we get.
I mean, is that just the algo jumpers? That could just be the algo jumpers.
Really quickly.
I got
I need
I got 84.75 is a swing number for today. I'm not sure how high we got. You got the spider up there. You don't
All
have
right,
the
initial
S&P.
jobless claims came in at 225,000 versus 220 expected. We get continuing jobless claims to come in at 1.49 versus 1.47 million expected. These are separate numbers from the CPI report. Still waiting to see the CPI number hit here.
Wow, we are ripping
There we
here.
go. All right, so we got here 0.4 reading increase on the reading that was supposed to be estimated at 0.6. So not the best there. Trying to get through here into the data. Just need to open up the report.
That's below the estimate, Mitch. It was 0.4, 0.4, and the estimate was 0.6. So that's good on the actual that CPI reading.
Looks like we got 7.7 year over year. That's going to be bullish there. We're in the 7 handles, team. 7.7. Estimate was 8%, prior 8.2. That means we went down what we got 0.5% there on the CPI year over year. Let's look at the core. I'm still looking for the core here to figure out what that one is. That's important there, but definitely that's a nice move there. Here's the core, rose 0.3% in October after rising 0.6%. Remember, the estimate in core was 0.5. Really good readings here for the upside. Bulls look like they have a story to catch on. And of course, we know how this market has been positioning, I feel like, for the upside, at least money managers taking their shot. So right now, in my eyes, we got a nice support right here at 374. I'm going to be looking for that support to hold here and now look out. I think as long as, we continue this kind of rally, I could see 390s in reach today. So it looks like the numbers coming in on the bullish side.
You don't have futures on there, right? Because
I don't.
my
Unfortunately,
system is just bogged down right now.
Unfortunately, I don't have futures. I don't pay for it. I need to, but hey.
Okay. All right.
I just usually use the SPY. I can see there. It went towards 385 as the high right now, about 384.82.
All right. I'm back here. Oh my Lord. Look at this. They are ripping. Yeah. Can you hear me, Mitch?
Yeah, I got you. If you share your charts, I'll
okay.
put it up.
Okay. Yeah, sure.
That's good news. Bulls taking control here. This is going to be good news also for the
sorry
Fed,
about
right?
that, folks. It's great news. Yeah,
Joel, you're cutting out again, my friend. I'm sorry. It's just the internet just kind of crapping out today. I'll put your charts up, though. There they are. All right, so as you guys can see, the numbers coming in light here, and the bulls taking a little bit of control here. Not a bad move. Crypto's moving too. That's the interesting one. If crypto's moving up there, just goes to show you how correlated these markets are. I was talking about it yesterday that I thought, is weird to see the crypto markets moving down, SPY moving up. Now you guys can see it turning around. What a day here. I'll try to bring up the Bitcoin chart here. I have it on Benzinga Pro, so I can go ahead and try to bring that up side by side so that we can see the action here.
38.67.
All right, got the SPY here on the right-hand side, and we'll put
38.67 was your 2-day high.
Let's see here. All right, trying to pull up here some crypto charts here for us. We can take a look at how Bitcoin is moving fast here. Yeah, Bitcoin getting a spike here with the SPY. Look at that. That just shows me the correlation that exists here, team. And so look at that. BTC getting a lift there, almost to 17.8. And then SPY up there now towards 384.40s. This is going to be looking good for the bulls. I'm sure even you're seeing the big boys maybe starting to get a lift off of this. Look for the beaten down ones to start moving. You can see Microsoft a little pop there. I'm going to take a look to see if there's any other big stocks moving here. Apple getting a nice little lift off of this. So definitely Market is looking good now, team, at least for right now. We finally got a data point that I feel the Bulls can take control on. So here you guys see it. I think this is going to give us, it could give us a nice fourth quarter rally, right? It doesn't mean that I think that the bottom's completely in, but I do think that this starts leaving room for at least finally, you guys can say it. Maybe we get that Santa Claus rally. It's looking like it right now.
3867. Can you hear me, Mitch?
Yes, I got you, Joel. I'm gonna put your
Okay.
charts
All
back
right.
up here.
Man, oh man, oh man, what a move here to be slow on. 3867. That's what we're going to focus on. We're right there right now. That's your November 8th high. That would be Tuesday's high. We just ticked 68 and a quarter. Blew that. We're in 3870 handle. That's a 116-point rally. I don't think I've seen a move off the CPI. I mean, we've had it on the downside. I don't think we've ever seen a move like this on the upside. We've already exceeded the average daily range. I mean, just yesterday, wow, what a turnaround! Waiting for months, for that to come in, and I think that's why you just, that we'd come that far off the low. Now, even if you missed that dip yesterday, what are you doing? Man, what a quick move. Sorry I didn't have the 1 minute up here for you. But man, oh man, oh man.
Someone's
Look
asking
at that.
why am I not disappointed? Because I was more leaning market neutral here. One of the things is that you can't really be leaning too much into these CPI reports now to the bearish or the bullish side. You got to be more reactionary, and that's why you guys didn't even hear me call out like a guess on where I thought the report would be coming in, because I felt like, we're at this point where we just need to look at the numbers. This number gives what? Definitely December. Watch how it probably changes on the CME tool for 75 basis points to probably go down to maybe even 5% or 3% chance. You're going to see a higher chance probably of that 50 basis points, and a lot of this on this report. So I'll even take a look at it right now to see what the CME FedWatch tool is pointing towards. But that's my guess right now. Let me take a look at what it actually says.
All right, 3876.75 is our high. Then that is, as I mentioned, that's above your 2-day high of 3867. We'll be keeping an eye on that. The high of the next daily high comes in at 3907. That was your November 2nd low, and then this big level, which worried me back a couple weeks ago. This 3928, which is the high of the move, but you have 1, 2, 3, 4, 5 highs in that area. I don't know if we can get there today because we've already had like a huge move, based on the average daily ranges. But I think the complexion of the market really changes if you could take out that high, those recent high of the moves. And there was actually a couple different one there, 3928 and 3924. In a quarter. Another thing you got to think about too is people are getting a lot of their money back from yesterday. So, it's a great rally. Let's just see how long it can hold. Up 110 handles. What an amazing move. Let's look at some of the stocks here. I got everything green. Helping crude oil. Crude's moving off this. Apple's moving up $5 here at 140 even. 2-day high in Apple comes in at 141.43. Microsoft up $8.50. What do we got? I'd only be looking at resistance here, guys. I mean, you could try and buy this on a dip, on a pullback, but the only thing I'm looking at is where resistance comes in. And for 31.65 was your 2-day high, pair of highs in that area. So Mr. Softy holding 231.30 area. Google up 371. Man, I just feel like they're going to flush this at some point here. That's why I'm talking so much about resistance. Google up 376. Everything, the tech up 4% across the board. Let's look at that. How are the banks looking on this? The banks are up 95 cents. Keep an eye on this $37 area for, high of the move 37.43 in Bank of America. We're right there right now. Also a pair of highs in that area. Gold caught a bid up 24.70. It's just good for everything. Inflation cools and the market takes off. What a change from yesterday, Mitch.
That's all you need, right? There goes the crypto scandal. Forget the crypto scandal. If crypto can come up on this, well, there you guys have your answer, right? How everyone feels about this number. Definitely the bullish coming in here. I mean, Jay, I hear you that Ryan Dietrich was right this time. But I mean, one of the things that I'd say about Ryan is that he's really good at giving probability towards the upside, right? And I think that the
Yeah.
probability was leaning towards the upside this time. So at least, we get right. I think one of the things here now is to think, of course, like everybody, is the complete bottom in. Of course, a lot of people will say yes now, but of course, you'll also have people on the kind of the sidelines that are talking about the earnings and how earnings will still get destroyed, and that's how we'll get the move back down. So just to give both perspective there, I think the bulls are definitely going to say that the bottom is definitely down towards the like
35. I mean,
that
we're
October low.
we're 360 handles off that low of the move at 35.02. Okay. Now that you have like a whiff of of good news, like the first time we've had some good news on this, that just makes it to me, it increases the probability that we're not going to go back down to that low. I mean, the reason is because there's been so many good opportunities to buy the dip during this during this move off the
Mhm.
3,500. There's been some big red days and the bulls have just came right back. So now if you didn't deploy, during this entire time, I mean, what are you gonna do? Start deploying money up 109 handles? So
I think
I
they will today, actually.
oh boy, oh boy,
Hey,
oh
Joel,
boy.
I think the money on the sideline is going to have full FOMO feeling into the bell today.
They're gonna have to be paying up, man. They're gonna have
Oh,
to be
I
paying
agree
up
with
big
you.
time.
I agree with you, but this is what happens a lot of times when we get a CPI report, right? We get the rip, and then it's going to be, do they buy the dip, right? There'll probably be a dip today. Will it
Oh,
get
there's
bought
gonna be
enough?
some dips today. Oh yeah, yeah. I
That's
mean, a
what I'll
lot
be
of days
watching.
you like to see follow through the pre-market high, and
Look for
you
the
know,
beaten down ones like Amazon. Do those start reversing, right? Those are really oversold. So these are the first area that I would be looking for a little bit of the bounce. And if leadership can come back, why can't the market just really get roaring, right? Value names had already gotten bought up. Well, let's see if it goes back a little bit into growth today. That's what I'll be watching too. Can ARKK get going again? Maybe it does an undercut rally type of move.
oh
We'll be
man.
watching.
I mean, I'm looking at these things and it's just like they're getting moves like it's a nice move right here in Amazon. But then, you look up and you have, it seems like there's just resistance everywhere. 92.10, 92.44. Those are your 3 and 4 day highs. You're still $2.50 away from that. So it's I don't know. It seems like the spoos are uh, getting back to the levels they were, but it seems like the stocks are just they're not responding yet to me. I mean, I look at things on a relative basis, but I would be pretty disappointed if I was long Amazon. I guess it's up 4.77%. So, but 91.72, that's your 2 day high where you're at. You're still a $1.50 off that. So, if you guys are looking for big follow throughs in your stocks off these moves, and I think you just got to look at your daily highs and make sure that they're taken out in the pre-market and they're also taken out in the regular session. Can you see the money coming out of anywhere here, Mitch? I mean, it just what I'm seeing it's all green everywhere. I don't see anything taking a hit off this number. Rivian continued to move up a little bit. Tesla's making a nice move. Uh,
You know
Exxon
what?
Mobil's rallying off the
Exactly.
oil.
Yeah. Oil even coming back. That's going to give you a little bit more of that upside pressure because that was the most beaten down sector yesterday. Right. And so if that can bounce back, then yeah, we have open doors for a risk on type of day. And I'm going to be looking for names that have been beaten down, like Unity that just reported, right? Well, there you guys see it. Turned from a really bad report off the after hours. Now it's already into the green from yesterday's price action. That shows me that I'm going to be looking for a little bit of some growth movement today. Look at maybe a beaten down name like Disney, maybe turning around, right? It was down about almost 13% yesterday. Well, this could give it the lift that it needs to bounce back some today.
Not, yeah, considering the shellacking that it took yesterday.
So
yeah, with these stocks, I mean, it's probably with the SPOOs up 119 handles. I mean, it's, the top two areas if you want to be looking at to try and buy stuff on the dip. First of all, it would be, the top of the previous day's range, and then the closes. So I don't know if we're going to see the closes on anything, but is it time to move on here? Have our guest on, or
not
there
yet. He's not
Okay.
he's not on here yet, but we'll keep rolling through. Now, one thing that I would think about, right, is short term, middle term, long term. Long term, I'm still a little bit concerned about oil prices at where they're at, right? If they stay above 90s into the 100s, will we see inflation rise again? That's a concern for the long term. Middle term, in my eyes, now we have the outlook of what happened in the election. We know that the Fed will probably move towards not doing 75 basis points in December, move to 50 basis points. Now, the question is, what will the Fed fund rate eventually get to? That's something to keep in mind. But from that point, at least in the short term into December, I see the door open for the upside.
You know what this gives credibility to?
What does it
Remember
do?
my school lunch theory?
The school lunch theory.
Remember
The
that?
lunch ladies, man. The lunch ladies.
Yeah, because they started buying the supplies, to get stocked up for school in August and September and October, and then everything filled through. And that $2.50 grilled cheese was $4.75, and that we'll have to break down the numbers. And actually, I have to talk to my buddy that they came in. They told me about that statistic and see if it's true where it came in. I mean, we did look at the commodities and we should probably do some more research and find out when they take these readings. Because if you took it, early in the month last month, right? Let's say you took it at, October 10th or October 15th, crude was still down here. If you took it up here, you'd probably have a different reading, right? So I think a lot has to do with that. We looked at some of the commodities, corn, that's been pretty stable. Of all the commodities, that's been coming in off its high. Wheat has been a little bit weaker. You've had more of the political situation going on with that. What else do we have? What's really come in? Wood is lumber. I mean, if you consider, wood. I don't have the symbol for the lumber futures, but we're continuing. Just made a high at 78.25, so this is an absolute buy fest. Howard, we mentioned BAC. What about JP Morgan? That's moving. That's been up 281. Is that taking out the high of the move? High 132.29. Keep an eye on that one. That made the high of the move just on Monday. So there's a level for you in JP Morgan. And what else what other sectors do we want to cover here?
We're definitely getting in. We're definitely getting some up move. I wanted to pull the report here and show you guys a little bit what changed, right? I mean, I'm going to pull the report here. So here you guys see the actual report that came out, right? This is important to kind of look at to see what changed from September to October. Well, you can see here, fuel oil actually spiked pretty high. That's a concern that I would have for the next report, right? But right now, it seemed like that still kept us lower. So even though energy spiked here and fuel oil was the one that spiked high, it went from a -2.7 reading to 19.8 reading. So that shows there, pretty high increase there. Now, where did we get some help on? Well, remember, utility pipe gas service, natural gas, actually went down negative 4.6 after last two readings were in the green, positive 3.5 and 2.9. So that definitely helped us out. So natural gas prices come down. Electricity prices came down a little bit. So that's definitely an area that we started seeing a deflationary effect. We saw energy services at 1.1% in September, now a negative 1.2. So that right there shows you deflationary in energy, at least when it comes to energy services. If we look at the services, less the energy, this is also heading in the right direction, still not into the negatives, but shelter actually went up 0.1. And so that just shows me that right there, you're still seeing the sticky rental prices staying around. And remember, that makes up 40%. So at least when we see this really change, that shelter one, and it starts heading into the downward angle and maybe even into the negatives, that's really going to be where I think you start seeing inflation truly turned around. Used cars went down to 2.4. So that shows us that used cars are going down too. New vehicles also went down. So in vehicles, we're looking good, and natural gas, we're looking good. The area that changed to the upside were fuel. And so that's one area to keep in mind.
Okay.
All right. Tried to go through there for you guys on the actual report there. So you guys are seeing the actual labor statistics there. All right, let's take a look at what else is out there. I'm sure my man Dennis is like, what? Now we get light? I've been calling light for months, man. I'm sure that's how he was caught. We'll definitely be looking to see what happens there. I'm sure he's playing a little catch up like we all are probably doing. And I saw people talk about how, no options trading around this time. Yeah, there's a reason why. That's a lot of change in prices that happened before the open. Now it's going to be fun to see what happens here. I'm going to be looking at names in ARKK. Look at the ARKK already ripping there about $2 towards the upside. Remember, it cut its daily low yesterday, which was around 35. Now we can see maybe if it can hold these pullbacks towards around 34.50s. And I'm going to be looking at some of these names to really start getting some lift. Unity already pushing up. So maybe it's Roblox. Remember, Roblox really got hit yesterday. Maybe this gets a little bit of a bounce after really getting hit. New vehicles. I mean, you got an adjusted. It went down adjustedly. Joel, you're on mute. I don't know if you know.
All right, I'm back. All right, I don't know how I got on mute there. We just popped an ARKK to 35.36. Once again, we're just going to be looking at see if we can get to the 2-day high at 36.13. So that's getting a boost for ARKK. What else do we look at as far as the growth goes? You mentioned Roblox. That had a rough day yesterday, rebounding today. Yeah, up 228. Lot of way to work to get to yesterday's high in that one. But what's interesting about this Roblox is the former low of the move was at 33.20. So let's keep an eye on that. We're old support, new resistance here. Currently holding up at 217. So I don't know if we're going to get Triple D back on before the end. I know things were not working out in his favor as far as the overnight positions. So hopefully this changed things for him. What else do we need to take a look at? Gold. We talked about yesterday. This is
that's a good
big
one to
pop
look at.
for the gold market. Yeah. We talked about this. Maybe some of that money coming out of Bitcoin is going to be going into the gold market, or if you can get your money out of Bitcoin. But man, the 17 right where we're trading right now, 1740 area, 1740 multiple highs back in September before you broke down. Came back up to that area in October before you broke down, and then you're back there in 1, 2, 3, 4, 5 days. So big move up for the gold market. Finally, not an inflation hedge. I guess it's they're treating it more like with equity now. Whoever thought silver which held relative strength, on the decline while gold made a low for the move. Not silver, nothing on the monthlies and silver until to 2266. That's a ways away. I haven't been up at that psychological 22. Nice round number like that. Uh, I don't know. Do they halt the market on the upside? I guess a 5% halt, man. That'd be absolutely incredible. If we did that, but who knows? They're up. The Spider and the S&P are up 3% now. So you do the math. Another 2%. Holy mackerel! Be a big old rally. AMD, someone's asking about advanced micro devices. Let's see how that's trading. That had been really sleepy down here. Look at that. $65. That stands out. You had the gap high at 64.03. You started to work into that gap the other day when you got to 64.96. So keep an eye on the $65 level. Nvidia turns it around and man, I don't think the 145.06. Mitch and I were talking about this one about the gap fill here in Nvidia. It just you had a low at 149.59, and then you got back up to 148.91. So still got some work to do to fill that gap in Nvidia.
Yeah, I think that, a lot of people might have gotten this one wrong. And I think that, one of the things is just being flexible now. If you were, for some reason, looking at this to be a hot report and now you're seeing, 7.7, to me, that if it was 7.9, I would still be in the camp that maybe, you're just off the estimate 0.1. But that's actually a really good downturn, I think, towards 7.7. And you guys know, I've been in that bearish camp. So for me to lean towards the bullish side means I got to flip a little bit. So right now in the short term, Q4, I'm looking bullish right now. And so I know that might seem a little bit off, but in my eyes, I think that we could have a good Q4 and then get hit hard as we see maybe prices in oil continuing to spike, and then inflation could roar its ugly head back around. But right now, in the short term and until December meeting, it seems to me like the upside is the path to least resistance.
Well, we'll see what good thing we got Blue coming on tomorrow.
Yes.
To give.
That's going to be great. We got Blue. My boy Blue. Or everybody's boy Blue. It seems like it. Risk on. It seems like it. I mean, I'm going to be watching a lot of the names like Roku that were just beaten down, right? They got this 50 mark right below on Roku that I like. Could start coming back. These are all stocks that normally I'm straight up renting these. I'm not trying to stay in them because I still don't trust them overall because they're not money making stocks. But I think today is going to be that day where you might have some people actually even dipping into growth names and trying to catch them, as the FOMO train is going to be rampant.
Yeah, I mean, there's a lot of people underwater in those. I mean, I don't know if this one. No, I mean, you've had just a really strong rotation into value. I don't know if if this just is one 1 month number is going to be able to put a dent in that kind of rotation. I mean, it's been vicious, and so. I don't know. A lot of people still way underwater in a lot of these stocks, and you can use your daily levels and stuff. But I would say even today, I mean, you get Tesla's getting a nice bounce today. You see the growth, but I think what's so key to the market, and that's a good thing to mention, is can these stocks hold up after being under these I'm talking about the big guns, Apple, Microsoft, Google, Amazon, Tesla, after being on so much pressure for so many days. Now they get a pop, and I think that's going to be, if you start to keep your eye on the pre-market highs for these issues, and make sure you got follow through that, and then just look at your corresponding daily highs. But we've had the biggest overnight, or we've had the biggest moves in the S&P on the downside on the 1 minute chart, on the on the bad numbers, and this is probably the biggest 1 minute move on the upside that we've seen, and of course not during the regular sessions. So we hope everyone did okay on this, but I don't know. I'm just skeptical here, Mitch. I know you're getting bullish, on here. I think there's
We
room up.
changing seats, man.
I I'm cautious. I've been trying to stay in the bullish camp, right? It's just 1 month's worth of numbers. It's just these big moves are just, a lot of times they're not sustainable. So I'm not recommending going out, selling, shorting, or anything like that. I just think it's just very clear what the market needs to do in order for me to hop on the Q4 rah bandwagon. Inflation's okay, Fed easing. I mean, it's a very clear level to me, and there it goes. It gets above this area, then things really open up to the upside, and we're sure getting a good start today, guys. Sorry about the technical difficulties there, and kind of messed it up. Mitch, you did a great job on the number, and we'll get the dirty details from Triple D tomorrow. So thanks for joining us, and Mitch, I'll check in with you later on.
All right, we're going to wrap up here. I'm going to go ahead and start wrapping up. Like always, you guys can keep up with Joel Elconin on PreMarketPrep.com. Up next, we got live trading action from Benzinga TV. Don't miss it, team. I'm ready. You guys see the green light in the back. Who's ready to come over to live trading and see if we can get into green ourselves? I'm ready to get after this market. And like I said, there's two things that I've been looking for in this market. And I've said this multiple times. One, a pause or pivot in the Fed. Well, of course, what is that going to take? It's going to take the actual number one thing that I'm looking for is for data to actually start showing us that inflation has truly peaked and is coming down. I think finally we've gotten that number that the bulls will start attaching themselves to. And this will be the combination battle here to actually have a variable to say that the Fed is going to pause, at least slow down the rate of hiking. So does this mean that the hikes are completely over? No, it does not. But it does mean to me in the short run that the traders that were calling for a 50 basis points in December, they might have it right. And so at this point, short term, at least, especially even today, I'm feeling a little bullish. Keep your eyes on Bitcoin. That's another thing that I would say keep watch. We saw how that popped up. But will there be concerns about the cryptocurrency market? And all of a sudden it gets another downturn. If that does happen, keep your eyes on the overall market. I feel like the correlation there is still present, and we need to be watching a little bit of both markets to give us a little bit of a hint of where this is going. Hope that you guys enjoyed this show today. And yes, I agree with Sydney, data driven. That's what the Fed has said. Now they finally got a data point that agrees. Remember, they're more focused on PCE report. So that's the next report to look for. If PCE can show us the same outlook that CPI showed us, well, I definitely think you're going to see the Fed and the talking heads even today showing what they're going to probably giving themselves a pat on the back, telling themselves that, hey, what we're doing is actually working to fight inflation down. We'll see what happens today. Give a thumbs up. I'll see you guys over at live trading. That's coming up next. You don't got to go anywhere. Stick right here. We're going to bring you guys over to, of course, Benzinga TV coming up next. And like always, team, give the thumbs up. We got a great day for you guys. And I got one more thing that I want to bring you guys up about. So one of the things that we always get questions on, and this is kind of normal, that we get questions about, of course, is taxes. And how does traders approach kind of taxes and what we can do? Well, we got a great show for you today. Don't miss it, team. We're going to be actually talking with a guest on today at 4:30. Don't want to miss it. Dr. Jerry Allison live on Benzinga TV. It's going to be talking all about what is going on and how you guys can best prepare with taxes moving forward. There's going to be a lot to talk about. Trader tax status. What does it take to qualify? What is trader tax status? What does it mean for you and the IRS? How does this status changes your deduction? The burdens the IRS places on investors. Trading as a business. Our suggestions for maintaining this status, and mark-to-market accounting. Come find out all about this topic today, 4:30. Don't want to miss it right here on Benzinga. And for any means, if you're not subscribed, definitely hit that subscribe button below so you guys can see all the market action. We'll see you guys over on Benzinga Live now as we get over to some trading action. Hit the thumbs up. And of course, check out the tax stuff. That's going to be definitely a benefit, especially if you've had some gains this year. We'll see you guys over. Hit the thumbs up on your way out.